Hi folks, Marina Stroud here. I am your product education lead. I'm thrilled to have you with me today as we dive into another interactive bootcamp session. These webinars are your go-to resource for hands-on guidance across all Tradesmith products. Alongside me is Kristen Magenst, your product education specialist, and together we host these monthly boot camps to give you a real-time, one-on-one learning experience. So whether you're brand new or a long-time user looking to sharpen your skills, we're here to help answer your questions on the spot and make sure you get the most out of your tools. The recorded webinar and script will be posted to the support menu within Tradesmith Bootcamp folder. And I will also send that to you as well tomorrow afternoon for everyone that registered for the recording. All right, so let's go ahead and check out today's topics. Today, I will introduce you to Trade360's powerful tools and features, which will help you follow a methodical system. We're going to explore how to minimize emotional decision-making and stick to a grounded strategy for investing. So I'm going to give you a tour of the essential Trade360 features to get you up and running, and we're going to cover 5 simple steps. We're going to import our brokerage accounts so we can start tracking our investments. I'm going to show you how we can set up our alerts, rebalance your portfolio to optimize its performance. We're going to then learn how to check market health and find the leading stocks in strong indexes and sectors. And then the research part, which is so much fun, we're going to screen and research for opportunities. All right, so just a quick note before we dive in. Everything we're sharing today and in future tutorials is just for learning and exploration. We're not licensed financial advisors, so we can't give you personal recommendations or advice tailored to your situation. So please think of us as your friendly tour guides through this world of investing tools. And don't worry if you miss anything. Again, we're recording today's session. You'll be able to hit replay whenever you like to catch up on anything you didn't catch the first time. Awesome. So let's dive in. We're going to kick things off with an overview of Trade360, how it works, and a wide range of powerful features and tools. From there, we'll walk through the Tradesmith methodology. This is the framework that brings it all together. You'll see how this approach helps take the guesswork and emotion out of investing. So it's super important. All right, so what is Trade360? Trade360 is a bundle of Tradesmith's flagship stock tracking and alerting program, TradeStops, and our premier market analysis and screening program, Ideas. So together, these tools form the foundation of Trade360, giving you everything you need to monitor your investments, stay in sync with market conditions, and uncover fresh opportunities with confidence. Let's break down the Trade360 features and tools by product. So TradeStops, think of your portfolio management tools. With these tools, you're going to take control of your investments with a fully customized workspace. So with TradeStops, you can import your brokerage accounts, you can set up other portfolios and watch lists to track new potential opportunities, and you have the analysis tools to monitor your portfolios. Stay protected and confident in your investment journey with our risk management tools. You'll have access to our risk and health indicators, which we'll get into, our position size tool to invest smarter, not riskier, and to leverage the risk rebalancer tool to keep your portfolio aligned. We also have the Pure Quant tool that lets you build and re-optimize portfolios. Then we put it together with Ideas, our market analysis and insights. Our market outlook gives you the big picture view of the current market conditions. We can also break down the sectors and commodities and see which are the top performing. Stay informed on trends in gold, oil, and more. Our fear and greed tool is a investor sentiment that can help you potentially look for different turning points. And we have our market signals, our bullseye and bear's eye signals that will uncover momentum shifts. And last but certainly not least, you have your strategies and opportunities. With ideas, you have various curated investing strategies and a stock screener tool, which allows you to filter and find opportunities that match your goals and criteria. All right, so let me check out the chat. Do we have any questions so far that we've covered before? David, if you link your account for the volatility quotient, will it automatically update the trailing stop loss when the VQ changes? Great question, David, and yes, it will. We update the VQs on a weekly basis to ensure you're always taking the right amount of risk. Great question. All right, so let's talk about the VQ actually. In this next slide, we're going to go into the Tradesmith methodology. The Tradesmith methodology, our key ingredients, help you stay methodical and disciplined with your trade plan. Because let's face it, folks, emotions like fear and greed can do a real number, even on the smartest of investors. And this is not breaking news. We've all been there. We hold on to losing trades too long, hoping they'll bounce back, only to watch them sink even lower. And yes, that is painful. And what do we do when we finally catch a winner? We often sell too soon, right? We're worried our gains might disappear. As a result, we miss out on some of the biggest upside moves. Well, that's where our system steps in to help you overcome these all too human emotions. At the heart of the Tradesmith approach are three powerful components: our risk metric, or the volatility quotient, health indicators, and position sizing. So let's toss the guesswork out. All right. Why trailing stops shouldn't be a one-size-fits-all approach. I know a common way to manage a trade is with a trailing stop. But here's the question: does a one-size-fits-all approach work? Many investors default to a 25% trailing stop loss, but not all stocks move the same way. Some are calm and steady, and others bounce around like a toddler on espresso. Ooh. So applying the same stop to every stock doesn't account for these differences, right? And this can result in premature exits or missed opportunities. So now imagine a smarter, more precise trailing stop that gives each stock the breathing room it needs, keeping you in winning trades longer and helping you capture more of the upside. So that's exactly what the volatility quotient does. The VQ is the heartbeat of the Tradesmith system. It's a customized risk metric calculated for every security we track. That's stocks, ETFs, mutual funds, and even indexes. By analyzing historical price behavior, the VQ determines how much wiggle room a position needs before it should be considered truly at risk. So what's the result? You avoid getting stopped out too early, and you give your trades the time they need to reach their full potential, often leading to gains far greater than what you'd see using a generic 25% trailing stop. And the best part, the VQ is dynamic. We update it on a weekly basis to reflect the latest market data, so you're always calibrated to take the right amount of risk. So there is the VQ breakdown. I like the little chili peppers. I think it pretty much signifies the the risk levels there. I definitely want to avoid the above 50% or sky high risk in my own personal trading plan, because that's just a little bit too spicy for me. But to each their own, right? Now let's take it a step further and look at the health indicator, your traffic light for investing. The health indicator gives you a quick color-coded snapshot of the stock's condition. Now, green zone. This means buy. When a stock's in the green zone, it's generally trending higher and moving smoothly within its typical volatility quotient range. In this zone, the stock is considered healthy and potentially in a strong position to continue holding or buy more. Yellow zone. Okay, hold. If the stock drops into the yellow zone, it means the price has declined by roughly half of its VQ. This signals a correction phase. Now, it's not time to panic, but definitely time to stay alert. So the stock could recover back into the green zone, or ultimately it can continue slipping lower. And if it does, it will eventually hit the red zone, which indicates a sell. So a drop beyond the full VQ pushes the stock into the red zone. So at this point, the stock has fallen by more than its historical volatility range, and it's exhibiting unhealthy price behavior. So this typically triggers a sell alert, indicating it's time to step aside. But it's not just about exits. The same traffic light system will also notify you when a stock re-enters the green zone, signaling a potential buy opportunity. So you'll never have to guess whether to stay in, hold, or jump back in. The colors are going to guide the way. So in this slide, I have a chart of Altria Group. On April 25th, which you can see here on the left-hand side, the health indicator triggered an entry signal, placing the stock in the green zone at approximately $40 per share. From that point, the health indicator applied Altria's volatility quotient, which I have listed here at around 13% to set up its dynamic trailing stop. So as Altria formed new highs, you can see the health indicator adjusted upward, locking in our gains, right? And managing risk all in real time. By simply following the health indicator, Altria Group is currently at a solid 38% gain. So this is a great example of how this indicator can support confident data-driven investing. Position sizing. This is the third key ingredient of our methodology, and it might just be the most overlooked slice of our investing recipe. So too often investors pile on the spiciest high-risk stocks plate with way too much meat. So meanwhile, they skimp on the milder, more stable stocks that quietly deliver consistent returns. That's like putting all your toppings on one slice and then leaving the rest of the pizza plain and unbalanced. No good. So that's where our position size calculator comes in. It helps you determine the perfect portion size for any stock, whether it's already in your portfolio or one you're thinking about adding. So we don't just stop there. The risk rebalancer takes this step further, allowing you to optimize an entire portfolio by reallocating your positions using an equal risk strategy. That means each stock carries a fair share of the load, whether it's a bold new flavor or classic favorite. So when you portion your portfolio properly, you protect yourself from catastrophic losses by keeping your exposure to high-risk stocks in check. And you also maximize your upside by giving enough weight to the steady, reliable performers that often bring home the best long-term results. In short, balance is key, folks. And with the right tools, you'll never overload one slice again. So before we look at an example, let me just pull up the chat window and see if we have any questions. From Morris, can we see how old a green zone stock has been in the green zone? Yes, you can, Morris. When you look at a chart of any stock, You can go back in time to see when it triggered an entry signal. Also, when you hover over the health indicator buttons, it'll tell you when it triggered an entry signal. But we can go look at a chart when we get to the website. Just remind me if you have a particular example that you'd like to look at. Great question. Eddie, if we use the risk rebalancer, can we go back to the positions before using it? Well, the risk rebalancer is a tool. It's a fancy calculator, folks, and it's not going to actually adjust your portfolio. We're going to actually touch upon the risk rebalancer. We'll go through it together. You would actually have to go to the broker to make any changes. So it is a tool. It's a brilliant calculator that helps you adjust your position sizing according to the VQs of each of your holdings, your capital, and the latest closed prices. But ultimately, you would have to take that information and make the adjustments at the broker. All right, fantastic. So let's take a look at position sizing at work. Suppose you're interested in purchasing shares of Altria Group and Tesla. At first glance, you'll notice a key difference. Altria Group is considered a low-risk stock with a volatility quotient of around 13%. In contrast, Tesla carries a much higher risk level with a VQ of over 49%. So this one is very spicy. Now, here's an important question. Would it make sense to invest the same dollar amount into both stocks? I want to hear your verdict on this, folks. Now that you can see this, what we're talking about, I want a yes or a no. Give me a Y or a no. Would it make sense to invest the same dollar amount into both of these stocks? No. Yes. Thank you, Nina, Randy, Manley. That's a resounding no, because Tesla has a much higher risk. So at Tradesmith, we approach this differently. Rather than focusing solely on how much money you're putting into each position, we emphasize how much risk you're taking with each investment. It's not about equal dollar amounts. It's about equalizing risk. So let's say you don't want to risk more than $1,000 on either trade. Based on the VQ, you'd allocate more capital to the lower risk stock, Altria Group, and less to our high risk stock, Tesla. This way, you're managing risk intelligently while still taking advantage of both opportunities. So we don't say, hey, don't invest in Tesla because it has a VQ over 49%. We just say, be smart about it. Manage your risk. So to simplify this process, our position size calculator does the heavy lifting for you. It calculates the exact number of shares to buy, tailored to each stock's volatility, so you can size your positions with confidence. Now that we have a solid foundation in our core methodology, risk, health, and equal risk position sizing, let's take the next step. I'll walk you through the website and guide you through the 5 simple steps to help you get started confidently with your Trade360 program. So let's just make sure we don't have any other questions before we get going. From Paul, what time period does the VQ measure? It is a measure of expected move over what time period? So we're looking at historical price data, specifically the last 3 years of data, with the last year, or the last year more heavily weighted. And we update the VQs on a weekly basis. But we can track the VQ, historical VQ, going back up to 30 years if we have the data. All right, so let's go to the website. Give me 1 second here. Yes, give me a Y. You can see my screen. Thank you very much. Perfect. All right, we'll get started here. Wayne, that's a great question on how often we should rebalance. We're going to get to that in a moment, but I would say yearly. You could probably do maybe twice a year, quarterly if you're very active, but generally once a year would do. I'm on my Tradesmith Finance account. Just as a reminder, you're going to log into your account via finance.tradesmith.com, no matter which product subscription you hold. Now, fair warning, my screen might look different than yours. That's because I have the Platinum subscription, which gives me full VIP access to all Tradesmith's tools. I think it's beneficial to showcase the full suite of tools to decide if you want to upgrade in the future. That's your choice, but I want to make sure you're aware of everything that I have. All right, so step number one, we're going to import our brokerage accounts. To import your brokerage accounts, you're going to click on My Portfolios at the top navigational header, and we're going to select the Manage tab below. Think of the Manage tab as your virtual filing cabinet. It allows you to organize your portfolios. You can also access various risk management tools as well. To create a new portfolio, we're going to click the green Add Portfolio button. Now you're going to see there's three ways that we can create a portfolio. Link to Broker allows you to import your online brokerage accounts. Add manually allows you to create an investment portfolio or watch list to track new potential trades. And upload CSV file is a great feature. It allows you to upload a spreadsheet of securities as a portfolio. This is helpful for members with a broker that Tradesmith does not support. Or if you just want to track everything manually, you can do that. We track the positions the same way, manually versus linking to the broker. The only difference is that if it's manual, you'll have to update your positions if you make any changes. So let's review the import process and select Link to Brokerage. Our primary vendor, Yodlee FastLink, uses a bank level security to ensure that all of your information is encrypted and protected. It's using the same standard leading technology that banks employ. So you will follow the prompts. You'll hit the continue button there, and you'll see the most popular US brokers, but you can search for your broker as well. Now, when you're going through this import process, please make sure that you're not logged into your broker. All right, because you're essentially logging into your broker through the Tradesmith Finance website. So you don't want to be logged into the broker while you're doing this, because your broker will probably think of it as a security breach and probably it won't work. So just to let you know. All right, so let me click on one of these. I'll just click on Fidelity. And you'll see that the process is pretty consistent across all platforms. It involves these terms and conditions that you're going to review, and it'll then redirect you. So you're going to follow the prompts, and then it will ask you to log into your brokerage account. So then it will ask you to provide the user ID and password for your broker. So once you've got that, it's pretty straightforward process. Again, you just want to make sure that you're not logged into your broker. I'm going to go back and we're going to go to My Portfolios, and I want to show you what it looks like once you've imported it. So you'll see typically it'll include the last four of the account number. And what you want to really pay close attention to is this sync date. This should be either today's date, maybe the previous date is okay. But if you start noticing it's lagging behind, you may want to refresh the portfolio. So what happens with a lot of folks is they're not logging into their account very often. I recommend that you log into your account at least once a week, all right? Because if you don't, you're going to lose the link to the broker, or we will lose the link to the broker, and then you're going to have to refresh your portfolio, which is not complicated. All you have to do is click this little green circle arrow button, and then you'll see refresh portfolio is already set up for you. You just hit that synchronize button. That's all there is to it. All right, so we've got our portfolio set up. Does anyone have any questions regarding setting up the portfolio? Terry, if we build our portfolio using link to broker, can we buy or sell securities from Tradesmith? Great question, Terry, and the answer is no. We do not initiate trades. We're great for tracking and alerting and researching and communities, but we do not initiate trades. Perhaps that's something we can do in the future, but at this time, no. Mort, what is the significance of the PVQ and diversification quotient columns? Mort, so the PVQ, just like, think of it this way. So just like we can track the VQ of each of your securities, we can assess the overall volatility of your portfolios. And they follow the same risk parameter breakdown. So we want to stay in that 15% or lower range. That would be low risk. 15 to 30 would be medium risk, 30 to 50 would be high risk, and anything above 50 is just too darn spicy. Most portfolios shouldn't go over 15% if you're diversified. That comes into the diversification quotient. So the higher the number, the more diversified the portfolio. 2 is a high diversification. I'll have to pull down the breakdown. I don't remember the exact breakdown, but you want to be as close to 2 for the DQ. That is a strong diversified portfolio. All right. So now moving along, we have step 2. So step 1, we've imported our brokerage accounts. Step 2, we need to set up our alerts. So let me pull up this account here. This is just a test investment portfolio that I've pulled up here. And as you review your positions, you'll notice that the risk levels and the health statuses vary. It's important to understand that not all of your holdings may currently be in the green zone. And that's completely normal, especially if you're new to Tradesmith and you haven't been following our indicators until now. You'll notice that in my test account, several positions entered the red zone. For example, Allegiant has been in the red zone for a little over 2 months. So this is what I mean when, again, you can hover over these health indicator buttons and it tells you when it was stopped out. If you hover over a green or a yellow button, it'll tell you when it triggered the entry signal. But going back to Allegiant, it was stopped out over 2 months ago. It triggered the red zone or stop out on April 7th, 2025, after its price declined by more than its volatility of just over 20%. Now, on the other hand, if you look at Carvana, it has an extremely high VQ, over 91%, making it a super spicy stock. But despite the VQ, Carvana remains in the green zone and has held strong there for over 1 year. Now, I'm not telling you to go buy Carvana. You might decide that you're not comfortable with the heat that comes with a spicy stock like Carvana. But now that you have this insight into each stock's risk levels before you invest, you may choose to steer clear of highly volatile stocks altogether, prioritizing stability and lower risk instead. So now the next question that you might be asking is, well, what do we do with our red zone stocks? You might not be ready to sell or offload your positions that have entered the red zone, and that's perfectly fine. However, if you still want to follow a disciplined exit strategy in case the stock continues to decline, you can add the VQ percent trailing stop loss to stay protected. So let me show you how to do that. The first thing I'm going to do is sort the health column and bring all of my red zone stocks to the top of the list. Then we're going to select them. by clicking these little white boxes to the far left. I'm just clicking here to select. And then we will hit the Add Alert button. So you'll notice here that the VQ% trailing stop is populated from my list of templated alerts. I'm then going to hit OK. And we'll confirm that. OK. So once you add the alert, you're going to see a black bell with a number 1 next to the bell that indicates the number of active alerts. So we have an active alert. If the alert is triggered, if price should fall by more than its VQ from a recent high close price that took place on or after your specific entry date, you're going to get an email notification. You'll also get a push notification on your cell phone if you have our mobile app. You'll also, once it's triggered, the bell will turn purple. So those are some little differences. But yes, you will be alerted if the stock's price drops by more than its VQ. All right. So now what do we do with our green and yellow zones? You might be asking, well, these don't have bells. Do we have to add an alert for these guys too? No, you don't. The health indicator is a system alert that you can set up globally for your green and yellow zone stocks. So there's no need to add an individual health indicator alert for these remaining positions. So let's go there. We're going to go to our settings. To enable your health indicator alert, go to your program settings by clicking on your first initial drop-down menu. We'll go to settings. And we're going to make sure we're on settings here within this menu. And we'll scroll down until we bump into our system alerts. So you want to make sure that the health indicator option here is set up for your investment portfolios. That's priority number 1. So you can see here, health indicator, you can set it up for green zone, the different yellow zone, upside, downtrend, and red zone. That is key. You can also set this up for your other opportunities like watch lists, newsletters, the Billionaires Club, baskets, and so forth. But I keep it as limited as possible because that's more alerts that I'm going to be getting, right? So I want to prioritize my investment portfolios first. I also highly recommend that you enable the entry alert signal, which notifies you when a stock enters a new light cycle or transitions from red to green. The ideal cue for a re-entry opportunity, right? Because again, the health indicator doesn't just let you know when it's time, when it's safe to buy, hold, or sell, but it also lets you know when a position that was previously stopped out triggers a new green light. All right, now that was a lot of information that I just covered. Let me make sure we don't have any questions here. Can alerts be set up for options? Yes. Bain, you can set up alerts for options. We have different alerts for options. You can actually use an underlying asset alert and use the VQ to track the underlying asset. But we also have various option alerts. R. Franklin, how do you activate the entry for each stock? I'm not sure what you mean by activate the entry. I imagine you're talking about the re-entry signal. So what reactivates red to green? Great question. We want confirmation that prices are moving higher and that we're sustaining an uptrend. So we need to see that price bounces at least 1 times its VQ and that we're sustaining a trend before we initiate a re-entry. Wayne, yes, options will show up on your portfolio if you have options. So if you're importing your brokerage accounts, you will see your options. Terry, inverse of trailing stops, is there a function to maximize profit for a stock for traders? You would have to set up a specific target, and we don't work with setting up specific targets like to do risk to reward. But that's a great question, Terry. If you have specific thoughts on that, send us an email. Maybe that's something that we can consider in the future. All right, let's move along here. Now we go to step number 3, rebalance our portfolios. So in addition, the third step here is to evaluate the share sizes of your existing holdings to ensure you don't overexpose any single stock. So keeping your portfolio balanced helps manage risk and prevents any one position from having too much influence. To access the risk rebalancer, we're going to go to My Portfolios, and we'll select the risk rebalancer tool. You'll then select your portfolio. We'll just select our test investment portfolio, and we'll hit the rebalance button. Now, I'm not going to go into all the fine nitty-gritty details here. There's a lot of information. I could spend a whole lesson just on the risk rebalancer. We're going to focus on the rebalance results just so you can see what it's doing as far as adjusting our share sizes. So again, the risk rebalancer takes into account 3 key factors: the volatility quotient of each of the positions, the latest close price, and the total value of the portfolio. So let's walk through an example so I can show you how this tool works. If you look at Berkshire Hathaway, it has a relatively low VQ of about 13%. Whereas Carvana, as we know, super spicy, right, has a VQ of over 91%. So after running the risk rebalancer, the tool recommends about 21,000 for Berkshire, and for Carvana, just about 3,000. So it also provides the corresponding adjusted shares. So we can see that here on the very far right. The key takeaway here is that while the dollar amounts are going to vary under the position size, you're still taking the same percentage of your total trading capital per trade. So in this case, we're risking 1.74% of our trading capital per trade. So this approach ensures that your portfolio is balanced by risk, not just by dollars, which is a more strategic way to manage volatility and protect your capital. All right, so moving right along, we're going to get into some fun things here. I want to look at market health and show you how to scan for opportunities. So step 4 is checking out market health. We're going to go to Markets at the top navigational header. So far, we've explored the core features that support effective portfolio and risk management. Now, let's shift our focus to the powerful tools designed to help you research the markets and uncover investment opportunities, no matter what the market condition is. All right, so we're here under Markets, Market Outlook. Under the Market Outlook tab, we display the top US and foreign indexes. The default tile view is pretty, right? It provides a little card here for each index. It allows you to scroll to view the 52-week price range. Let's examine the S&P 500, which serves as a benchmark for the overall health of the market. So the S&P 500 has been in the green zone for approximately 4 weeks and triggered an entry signal, meaning it went from red to green on May 12th, 2025, excuse me. So shortly after this, our bullseye market signal became active, adding further confirmation of improving market conditions. More recently, we also have the S&P 400 mid cap, the small caps, and the Russell 1000 also recently triggered a bullseye market signal. It looks like on June 2nd of 2025. The bullseye and bear's eye market signals alert us when the market tides may be shifting. So they help identify potential turning points across the major indexes that we track. So to put it into perspective, has anyone done any beach runs? Running on the soft sands of the beach? I've done some in my day. It's very difficult and draining, much like how the markets behave when a large portion of the index's components are in the red zone. So the overall performance gets dragged down and it makes it harder to build momentum. However, the S&P 500, let me go to the list view real quick here and show you this chart. I'm going to click on the S&P 500. This pulls up this particular chart view. And you can see that since the S&P 500 was stopped out right here with a red bell, that was on April 4th, 2025, the percentage, let me scroll down so you can see this right here, this health distribution. You can see the percentage of green zone stocks within the index has been steadily climbing. So this is a positive sign that the market's foundation is firming up beneath our feet. So how do we trigger a bullseye and bear's eye market signal? These markets consider the health of the index, right? Its health status, whether it's in the green, yellow, or red zone, and the health distribution. If a bullseye or bear's eye market signal triggers, you're going to automatically receive an email notification. So there's no need to set these alerts. You don't have to worry about that. You will be alerted. Now, for more details on the bullseye and bear's eye triggers specifically, I'm going to ask that you refer to the script that I'm going to send you, which has that information. The bottom line is we're looking for strong performing indexes that show an increasing concentration of green zone stocks among their underlying components. So when we see this kind of healthy distribution, we can confidently narrow our focus to green zone opportunities within these leading markets. So that brings me to my next question. How do we find green zone stocks within the S&P 500? The list view, which is my favorite view because it gives me a nice bird's eye view, also allows you to scan for the market components. So to scan for the S&P components, we're going to click this blue drop-down triangle, and then we're going to hit View Components. You're going to see that the site routes us to the screener tool, which automatically populates the country, market, and asset type filters for us. The screener tool, if you have not used this tool, it enables you to scan for opportunities based on trade or investment criteria that's most important to you, allowing you to filter securities by our indicators or other technical or fundamental data. So let's go ahead and hit Add Filter, and we're going to add Health, Trend, and Risk. I want to cover the indicators that we've discussed today. So these are located within the TradeSmith proprietary metrics. I'll check Health, Trend, and Risk. Now we can click off the menu and set our parameters. You can, as you can see, there's many other technical and fundamental indicators that you can peruse, and feel free to play around with that. The more filters you add, the more restricted your results will be. So health, what do we want? Green zone. I want green zone stocks. I don't know about you, but I want green zone stocks that are trending up. And let's do this. With our risk, I want to show you, you can go between. So what if we do between 15 and 30%? In a volatile market, you can adjust your risk preference and be within the low to medium risk range. That's up to you. Again, I'm just showing you an example. You can make this your own. Then I will hit this apply button. And now that we have that, we can hit this run screener button and see what results we get. All right, so we have 100 results. Now, when reviewing your results, you can adjust the displayed columns of information and sort any of this information alphabetically, numerically, in ascending or descending order. So for example, I want to show you, here's the business quality score. The business quality score considers the company's growth, payout, profitability, and safety fundamentals. So these factors can help you find high quality stocks with more stable earnings, stronger balance sheets, and higher profit margins. So now we can combine the tradesman technicals with fundamentals. That's the best of both worlds, right? Now I want to see a BQS of 80 or above. 80 to 100 is high quality. It's out of 100. So I want to go at least 80 or above. You can go a little bit more conservative if you want to get more results, but I want 80 or above. I'm going to sort the BQS column and bring all those that are high BQS to the top of the list. I don't want to focus on stocks that have bad or poor fundamentals. I want to focus on strong fundamentals and strong technicals. Now I have these 10 or so that I can isolate to. Another metric I like to look at is the free cash flow, right? This is the lifeblood of any healthy business. It reveals how much cash a company generates relative to its market value. So what exactly do you mean? It's the money left over after a company pays its bills and covers capital expenditures. It's a true test of the financial breathing room. And as the saying goes, cash is king, baby. Especially when that cash isn't just coming in, but sticking around. So, as a general rule, look for stocks with free cash flow yields above 6%. That's double the average free cash flow yield of the S&P 500, which hovers just around 3%. So a higher yield can indicate a solid opportunity, especially if the company shows strong fundamentals and consistent growth. So how long did it take us to do all this, folks? I mean, yes, I know I had to show you how to navigate, but how long does it really take us to do this? This one screener? Not very long. Just imagine how much time you'd spend and how many websites you'd have to comb through to identify high-performing S&P 500 stocks that are also fundamentally sound, right? So you can identify several here that you can continue to look at. Now, we can take that same analysis and also look at our sectors and pinpoint market strength that way. So let's go back to our markets and S&P sectors. And I'm sorry, I'm not grabbing the Q&A right now because I'm trying to get through the presentation here before we're here too long. But I will take a look in just a moment. I'm going to go to the list view. Again, I prefer the list view. It gives me more of a bird's eye view. And I'm going to sort by health. Definitely want sectors in the green zone, but I can also sort by the health distribution. That's the percentage of underlying component stocks in the green zone. And the two top sector contenders are utilities and communication services. There's over 70% of underlying utility components, and then we have, it's kind of like a tug of war, almost a tug of war, not quite. I'd like to see this a little bit higher, but we can include it if you like. It also recently triggered an entry signal about a week ago, and so did technology. But I'd like to see the green zone component a little bit higher than this. Looks like energy just triggered an entry signal as well. All right, well, let's just go with utilities and communication services just to show this example. I'm going to click on utilities, view components, and you can see it pre-populates our filters again. Now we need to add communication services because it wasn't included there. So all we have to do is click on the sectors filter, click on the drop-down menu, and we'll check communication services, and it's been added in there for us. Now we're going to, let's do the same filters. Why not? So we're going to click Add Filter. We're going to go to Tradesmith Proprietary Metrics. I'm going to go Health, Trend, Risk. We'll click off and set our parameters. Green zone stocks, healthy stocks that are trending up, that have a between risk. Let's go 15 to 30% within the utilities and communication sectors of the S&P 500. All right, let's see what we get. We'll hit Run Screener. And now we have 22 results. Again, I can sort by business quality score, bring our top fundamentally sound stocks and technicals right here. And we have several that we can even take a look at further. Now, you're probably also wondering how I can adjust my views. Maybe you're not seeing the same views as I have them laid out here. You can adjust your views. This is the default view. It's my active view because it's the dark view. Anything here, see, that's the dark view. That's active. You see the white edit pencil. You can click that little edit pencil, and any green check box is a column header that you see below. You can also move your column headers. So I'm going to left click and hold with my mouse and drag wherever I'd like it to go. So again, with your left mouse click and hold and drag. So you can move this around and tailor it to meet your needs. And then you would just hit save. You can create additional views as well. You can see I created a crypto view. You can click this little drop-down menu and hit Add View, and you can create multiple views depending on the purpose of the analysis. All right. Okay, so we're coming to an end here. Before we get to our live Q&A, I want to just kind of go over some of the educational resources here. So to access your educational resources, you're going to click Support at the top right of your program site. You're going to see a menu which has been recently updated. We'll go through the updates here in a moment. That provides the customer success team. You can schedule a 30-minute concierge. This is a one-on-one walkthrough with a knowledgeable agent. You can also get to our Getting Started series. If you are new to Trade360, I'm going to click this link. It takes you directly to our Education Center. You will need to review our Trade Stops Pro and Elite, and then Ideas Elite. As a Trade360 member, you have the top tier programs or the top tier levels for Ideas and Trade Stops. Ideas Elite and Trade Stops Pro and Elite. All right. Going back to the menu, you can also review our boot camps. So this is where Kristen and I post our bootcamp webinars. If you click to expand that folder, you can review previously recorded bootcamps. If there's one coming up, you can register. You also have access to Senior Analyst Mike Bernick's Inside Tradesmith webinars. These are fantastic. I recommend that you start joining. Even if you're new and don't understand everything that's going on, you're going to start picking up on the information. Okay, at the bottom of the menu, we're on the main menu of the support menu, but we also have two other tabs. We have our products updates tab, this megaphone. It provides the latest and greatest feature updates so you can know what has been released. And this takes you, the little open book, to our education center. So real quick, let me close this support menu. You'll notice that if we have a new feature update, you're going to see a little number there. I can click the support menu. The little megaphone is drawing my attention here. I can click on it and you can see that we have some platform enhancements that you can review. One that I'd like to point out is the publications widget and Tradesmith CEO Keith Kaplan's Twitter feed. So let's go to our dashboard here at the top navigational header. I'll close this menu out and you can see here under publications, we have a feed, which includes Keith Kaplan's Twitter feed. You can follow on Twitter if you are on Twitter, or you can review these posts here. So pretty cool information, I think. Again, support, you'll see the little number went away because I clicked on it. You can come back here and review the features. To go bigger view, you can click that little button there. Also for the Education Center, to expand it, click that little button and it should open up a new internet tab with all of the Education Center for you. Oh my goodness. I wasn't expecting to go an hour. I am so sorry, but that was a lot of information to cover. So let me come back here on camera for you folks and let's cover some questions. I'll be here. I have nothing else to do other than to be here with you. Thank you, Terry. I try to keep it at 30 minutes, but really it's so much information. Hopefully it's not an overload. I tried to simplify it as best as I could. Let's go back up here. Let me scroll up to our Q&A because I don't want to miss any questions. All right, going back up here, Mort, are your alert settings considered a good template? I think I've personally checked too many boxes and I get overwhelmed with data. Well, Mort, let's go back to our settings. This is my demo account, so I'm going to show you exactly how I do it in my personal account. But under alerts, I specifically focus. Let's tackle first the investment portfolios. That's number one, that is key. I definitely want entry signal checked. I don't really follow the early entry signal. This is this will alert you when we trigger, it's an aggressive entry into a stock that's still in the red zone. So generally I don't follow this. I do follow the health indicator. Specifically, I do want to know anytime it changes health status, even trend within the yellow zone, because if it's in the yellow zone trending down, I definitely want to pay close attention because it is getting closer and closer to that red zone. And then the red zone, I really like the new high profit. This is like telling me cha-ching, cha-ching, you're making money. Stock rating updates, I could take it or leave it. Same with company events, but if you want that, you can set that up. For watch only, I definitely have entry signal checked because this one, remember I told you that the health indicator also lets you know when we trigger a green light, and I'll show you that we automatically create a re-entry watch list portfolio for you. So you want to make sure this is checked. I don't need this one if I have entry signal. Let's see. Newsletters, if you're specifically waiting for a newsletter to trigger an entry signal, this might be a good one to have. Same with the Billionaires Club if you're following it. I'm not specifically following it, so I'll uncheck that one. I do want to know when my newsletters may be forming new high profits. And then, you can determine if you have specific baskets where you're specifically tracking. So this is kind of like bare bones. This is where I would have it. This will also help minimize some of those emails that you're getting. The other thing that I want you to check out regarding the re-entry, if we go to positions, oops, are you sure you want to leave this page? No. Let's save it. Okay, there's a little lesson for you. Save. If we go to positions, Oh, it looks like it's automatically doing it for us. Now we don't have to set this up. Disregard, disregard. But let me show you that reentry watch list portfolio. So if I go to my portfolios and hit manage, it'll be set up in your watch only section. You'll see a reentry watch list. Disregard these other ones. These are kind of testing and playing around with. So this is your reentry watch list. When you close a position that's in the red zone, we will automatically add that stock into your reentry watch list. That's why I say have the watch list reentry, the entry signal checked, because as soon as a stock goes from red to green, you'll be alerted and then you can go back into that trade. All right, David, bear and bull market alerts, are those automatic or do you have to set them up? They are automatic, my friend. You don't have to do a thing. So you will get an email alert when it triggers. Eddie, when I entered my portfolio, there are many red flags to the left, incomplete data. Yes, that could be, Eddie. Let me see if any of these sync test accounts have any red flags. Yeah, so you're looking at something like this. So you might be missing entry dates. You could be missing entry prices. It just depends on I think if it goes over 90 days since you've held the position, we may not be able to access this data from the broker. So you just have to come in and fill this information. It's going to let you know what you need to do when you hover over that little exclamation. Wayne, will there be a replay? Yes, absolutely. We are recording. And I will be sending this to you tomorrow afternoon, and I will be posting it to your support menu within the Tradesmith Bootcamp's previously recorded webinars. Mike, position size calculation is excellent, but the risk rebalancer tool looks at each position separately. So if I bought a stock over years, I get multiple buys and sells for the rebalance. Can I set it up to look at one ticker across all portfolios? That's a great question, Mike. And that's something that I have discussed in length with our team, our development team, and many other members have asked about the ability to track multiple purchase lots. At this time, we can't do that. So you can set up, when you go to the risk rebalancer, let me show you. You can select multiple portfolios, right? Now, if you have the same position across multiple portfolios, the tool it almost doesn't recognize it as the same position. It will look at it as a separate stock. And it will tell you to adjust accordingly. So you might have one adjusting up or down. They may not be the same. What you would have to do is take a manual approach, and what you can do is duplicate the portfolio. Let's say I have it across these two portfolios just to make it simple. Duplicate portfolio. This makes it a manual portfolio. I'm going to hit save. Okay, you have your duplicate. Now I'm going to duplicate this one. Duplicate. All right, so I have two duplicated portfolios. Then what I would have to do is, let's open this one up. I can select all these positions and I can either move or copy. Let's just say move. And then I'm going to move them to my investment portfolio duplicate. Then I hit OK. All right, are you with me so far? Then I'm going to go to my duplicate that has the combo of the two. And now this one probably doesn't have the same position, but let's just say these were both Apple. Then I can combine the positions. So I can edit the first line with the total number of shares. Entry date doesn't matter. Don't worry about the entry date. or the entry price. It doesn't matter because the risk rebalancer is looking at the latest close price. So don't even worry about that. Just make sure that the position has the combined number of shares. Now, you may need to, Mike, you may need to email me and we can go through this again because I feel like this was a little bit much to cover. All right. David, can you scan from a watch list? With the screener tool, I imagine you are referring to, David. So if I go to invest and screen, yes, it is a bit cumbersome, Mike. I agree. How do you scan your watch list for the snapback opportunities, bull and bear markets for calls and puts? Well, the options I think might be better served if you go to the options screener tool. Here we're under for stocks, but you have your save screeners up here. You can run your different screeners. There is a way for you to include, there's your baskets. You can include baskets if you have baskets. And you should be able to also include portfolios. Where would that be? Portfolios, there it is. So they have this under market and classification. Don't ask me why, but there it is under portfolios and watch lists. Then you can select your various portfolios and watch lists. Okay. Great questions. All right. What are the best filters for day traders? That's a good question, Sue. I may have to get back with you on that one. And let me jot that down because I may have to ask Mike Burnick for some assistance. You know, our site is not generally geared for day traders. So definitely not the health indicator because that is a more longer term indicator. So I don't know what filters we could use. So that's a great question. I'll have to follow back up with you on that. Nina, I'm a platinum member. I am getting tons of newsletter emails from other companies, and I don't know if I should junk them and put them as junk, or I should review them as part of Tradesmith, i.e. Market B. Yeah. Unfortunately, I know I feel the pain, Nina. I get the same emails as well. This is how we, this is part of our business profile. We do cross affiliations. You can, if you don't want to read it and you want to mark it and unsubscribe, go ahead and do so. But we do cross promotions across our affiliates. So you're not going to hurt our feelings. You can unsubscribe. That's what I do. All right, Rinaldo, thank you very much. Terry, given a risk rebalance portfolio, how to get position size for adding a new stock to match the risk of existing stocks? How to get position size for adding a new stock to match the risk of existing. I'm not sure I understand your question, Terry, but the risk rebalancer does allow you to add a new position. So if I select our test investment portfolio and we go to rebalance, we can go to rebalance review. And let's say we wanted to add a new stock to adjust this. Let's do PRX. I think, yes, we'll select it. I'm not going to add any additional cash. We'll hit save and rebalance. And then it's going to tell us how many shares to buy for the new ticker. I'm not sure if that was your question. You can see it adjusts our risk percentage per position because we added a new stock. All right. Joanne, how can I identify green zone dividend stocks? That's a good question. So if you want dividend stocks, again, we can go to screener and we can add that as a filter. So healthy green zone stocks that are trending up. We can even incorporate the Tradesmith strategies as part of Ideas by Tradesmith. You have access to our dividend growers. So we can go dividend growers. We can look specifically in the S&P 500 or any other market you'd like, and we can run screener. And you can continue to narrow down from there. We have 25 results that you can review. From here, I can sort by BQS, and I have here the top 5 or so that I can look at, high-paying dividend stocks. Great question. All right, let's go back to the bottom. I think I got all of the questions. Please let me know if you have any other questions. Sue, I'll have to get back to you on best filters for day traders. Let's see. If I missed any questions, please let me know or forever hold your peace. In my portfolio, I have a stock twice. How do I remove it? Mark, is this a manual portfolio or is this a synchronized portfolio? Because it should not be twice in a synchronized portfolio. Let me know if it's in a manual portfolio. We can easily remove it. So if I go to my portfolio, and you can tell if it's synchronized or manual, when you go to manage, you're going to see the little S, that's synchronized, the little M is manual. Synced? Oh, it shouldn't be. Winked? Dinked? Winked? What are we saying here, Mark? It shouldn't be in a synchronized account. In a manual portfolio, we can delete a position, a duplicate position by clicking it and hitting delete. Sorry, sync. I thought that's what you meant. Let me see here. I'm not. You can certainly delete it, but you want to make sure at least one of them make sure it retains the entry date, entry price, and share size. So it might just be an error in the synchronization. If you have a specific question you want me to get with our sync team on it, just send me an email. But I think you should be okay to delete it. So if you select the little white checkbox, you can hit delete, but just make sure that the one that you're deleting doesn't have all the data, like the entry date, entry price, and share size. Terry, why are S&P ETFs treated like an individual stock in terms of position size? Seems like 500 stocks would be treated much differently. Yeah, I can see what you're saying. They are treated as stocks. They're traded as stocks. And you definitely want to consider that when you have a portfolio of ETFs. You may not want to have 20 or more positions. That's a good question, Terry. I don't know if I can answer that. That might be another one that I follow up with Mike Bernick on. So let me write that down. Great questions, folks. And then Sue had the one about brain fart. What was Sue's question? Day traders. Day trader filters. Okay. All right. No worries, Tara. I understand. Thank you so much for joining. Any other questions before we head out for the day? I hope you enjoyed today's lesson, and you will get a recap of it tomorrow afternoon with the webinar script. Thanks again, folks, and I hope you have a great rest of your day and week. Have a wonderful weekend. Be safe out there. Happy Father's Day for all our dads out there, and we'll see you next time. Bye, guys.